Good evening, everyone watching us in India, and greetings of the day to all the delegates who are watching us across the globe. I'm Latika, Associate Vice President at IMEI. It gives me immense pleasure to let you know some of the data which we have churned out in the last 48 hours. We have around 45% international speakers who have spoken and are speaking today with us. We have 30% women speakers and around 30% international delegates who are viewing us live at the first virtual Global FinTech Fest organized by FinTech Convergence Council of IMEI and NPCI. This conference is presented by Department of Economic Affairs, Ministry of Finance and Reserve Bank of India and powered by Amazon Pay and brought to you by WhatsApp and Google Pay. As we reach towards the end of the event, we have another exciting panel discussion, and trust me, there were a lot of things which I heard at the green room. They are today going to be discussing lending, rebuilding resilience post COVID. Here with us, we have our esteemed moderator, Mr. Naveen Chandnani, CEO, CRIF, Highmark, Naveen Kukreja, CEO and co-founder, Paisa Bazaar, Sonal Kapoor, Director, Consumer Lending, Flipkart, Harshvardhan Lunia, co-founder and CEO, Lending Card, and Rajat Gandhi, founder and CEO, Faircent. It's a rare opportunity to have such amazing panelists. Delegates, please make sure that you keep your questions pouring in. Without any further ado, I would request Naveen Chandnani to take over. Thank you.
Thanks, Latika. Good evening, everyone. It's a pleasure to be here. I know we are one of the last panel. We will keep engaged. That's a promise. And straight, I would deep dive. Rajat, I would want to start with you, Rajat. Coming from a P2P lending space, we have seen COVID hit us towards the end of March. What has been the change in the consumer behavior in the last 4 months? Can you tell us that are they yet looking for loans? Are they active? Just wanted to get your feedback.
Hi everybody. I'm Rajat. Thank you for the introduction and inviting us over. In the I think the first week, or that is the April, when it's the end of March and beginning of April, we saw the demand really dipping down straight away. Though we were ready to lend out money, we've been lending money every day of the lockdown, but we saw the inflow for demand for borrowing dip a lot because people were not ready to borrow for anything because everything was shut down. So businesses were shut down. Consumers who had to buy something were shut down. So nobody was buying a television. Nobody was planning a holiday. Nobody was. So these are the consumption parts of it. And on the business side, everybody was in a shock, I think. And to take on new liabilities, I think that was the consumer behavior which was there. And so we quickly moved on that, and we said that what are the pockets of opportunities out here? And we came out with a solution called anti-lockdown loan for our consumers. That moved really fast for us because it simply said that you have an immediate need, you take a loan, and you don't need to pay for next 3 months. And after 3 months, either you can pay the principal plus interest, or you could convert that into an EMI of 3 months or 6 months. Okay.
Right.
So the idea was to unlock that latent need or some kind of a thing of future need kind of a thing where the pressure was not on them to pay the next month. I think that was the main thing. The second, what we saw was that people were conserving cash, even if they had the wherewithal to pay money back. The cost of capital or just the access of capital was playing on their mind. Okay, it was not that their salaries had stopped or anything. Like in April, nothing happened, actually. Except for the people who are the migrants and those kind of people. It was just way to conserve cash. So I think that aspect started coming in. June onwards, things opened up, and we're seeing a much different ballgame. And what, as a P2P lender, we are seeing is that we're getting much better quality of borrowers. Last 1 month, we have not disbursed a loan. The average CIBIL score, I may use it in front of you, is above 750, which we have been disbursing. So suddenly a much better quality of borrower is just hitting the platforms because I think other lenders have stopped lending. So that's the other behavior which we have seen, at least from a P2P perspective.
Great. You made a good point. In fact, from the bureau data itself, if we see in April, it was around 20 to 30% of the usual monthly average of loans being dispersed. Yes, but again, we are seeing green shoots. Sonal, I would want to bring you in over here. You are a part of one of the biggest, online retail marketplaces. How has the demand been on Flipkart specifically for loans? Can you just share some thoughts around that?
Sure. So, hi everyone. Thank you for having me here. So, Naveen, obviously, as a platform, we've, as Rajat was talking, right? Obviously, April was very hard because we just saw a dip and nothing was really live, right? Other than essentials, right? But what we've seen moving on from there, right? That even for our consumers, the definition of essentials has changed, right? So, from just thinking about groceries and consumables as essentials, what they started doing is kitchen appliances are essentials, right? TVs became an essential. Your equipment to do gym at home became an essential. And now, with this changing definition of essential, um, demand for credit options or digital credit options on the platform to be able to purchase the aspirational product, right? Especially in case where you're conserving cash, or maybe there is a real problem of cash. Actually see there are a lot of customers coming on the platform. They're looking for credit, not just in terms of repeat customers who have access to credit and essentially know how to check out using maybe one of the EMI options, but customers who are applying for new credit on the platform itself, right? In both of these, we actually see a high customer demand. But then there is the other side, as Rajat was also pointing out, that while there's a demand for credit for sure from the customers, right? But then there are lender partners who are tightening their risk policies, looking to improve the quality of their balance sheet. They're implementing cost-effective ways. They're not really underwriting new customers because they're trying to figure out how to adjust their risk models in times of COVID. So clearly there is a mismatch, and I think that's something that we look to solve for.
Okay. Thanks. You touched on a very important point, and probably I'll bring in Harsh. He's a NBFC. He's lending. So 2 points, Harsh. One is during COVID. Uh, you know, uh, I heard both the earlier speakers say that there was a slowdown in lending and
Yeah.
also underwriting. So, what have you seen in this last 4 months, and what are you currently doing?
So I think basically for small businesses, I think like my peer panelist suggested, Naveen, April and March onwards when the lockdown happened, March and May, which was a total lockdown, right? The businesses that stopped, people weren't visiting their shops, offices, or right. And we have a typical small and micro businesses where our borrowers are like a coaching class or a computer academy or a kirana store, a mithai store, right? And all of this had been shut down. So during that time, we also saw huge dip in demand because people were not visiting their offices, not having access to their documents and everything, and maybe were not requiring loans. I think when the first lockdown closed out May and then the second one started in June when opening of things started, we started realizing that people started visiting their offices and the business cycle also started a little bit. That's where we started the demand coming back again to us. In terms of credit, Naveen, for us, one of the critical parameters that we observe is in our cash flow-based lending model is EMI to ADB, right? We've always focused on giving a loan to him, which is based on his average daily balance. And the EMI is basically designed based on his average daily balance. Our funda has always been from the perspective that we try to collect or only give him as much loan as possible from our side, which we can collect it without on a zero touch basis, right? We don't have a pan India feet on street, everything to do it. We're a digital pan India model, right? We lend more than in 1,300 cities and towns. You cannot have collection centers over all of these locations. So that's where we started realizing that the cash flows are now coming back. People who are coming in June, July, comparatively July is far better for them. So cash flows are coming back. And during this time also, one more thing we realized from our end was basically to reach out to our existing customers and help them, right? Basically in helping them in their business, in understanding what pains are they going through it. We have taken an insurance policy for our customers where we reach out to them and say that in case you need anything, you should reach out to us and we'll help you in insurance and those kind of stuff, communicating with them. So I think showing empathy towards our customers, interacting with them, understanding their needs and problems was what we spent our last 3-4 months on. This month onwards, Naveen, we've started business, although not at the scale which we were doing in February. But I think slowly and slowly, as unlock happens more and more, unlock 2.0, 1.0 happens more and more, and as people start going back to a little bit of normal and start getting back their businesses, we'll see demand coming back to us.
Super, super. Harsh, I have one more question while you were speaking. You
Sure.
said digital collection. I'll come to that later. But
Yeah.
is digital lending a reality today end to end? So is 100% digital happening with you or with anybody else in the market? Is the video KYC, which was so important, really working?
Yeah. So, Naveen, if you ask me, out of 100 customers, is there a chance that you can go ahead and disperse to 30, 40 customers? Because you require a few things, right? The guy should have his PAN Aadhaar number registered with his phone. He should be available on video KYC. He should be able to access eNACH. He should be able to do e-sign. He should be able to submit his banking data through internet banking and everything. Yes, all of that is possible, Naveen. All of that is happening, right? But is every one of the customers doing to that? Is there literacy or awareness about all of that? No. We are still going ahead and building all of that, right? And like we were just talking before the discussion, right? Account aggregator is the next big thing which will democratize the data, right? So which will actually bring in and make accessibility of data to all the people, Naveen, as well. So if you ask me, do we have a framework right now, or is there a process set where digital lending can happen? Yes. Have we reached the stage where most of my peers or we are doing that? No, we still have a long way to go. And that does not just involve us in like the fintechs to create it. It also involves at customers end where they get comfortable, they are aware, and they are interested in using that as well. So I think good part is, but we've achieved the first level. The second stage will slowly and gradually happen as more and more all of us start putting that across.
Got it. Got it. So here I would come in and ask Naveen, because we are talking about digital, and Naveen, you have been a digital platform for so long. So typically, what have you seen on your platform, secured versus unsecured? And again, over there, I think anybody coming to your platform is usually digital, right? They are very digital savvy. They are Amazon native. So what's happening? Is there a shift? And you are seeing that the demand is going to be completely frictionless now, and fulfillment also will happen?
Okay, thank you, Naveen, for this question. I just want to take a step back in terms of what happened in April. What happened in April was that lending got exposed brutally in terms of lack of preparedness or readiness for digital. And while there were smaller, newer players who were claiming and at some points actually doing end-to-end digital also, but they were such a small part of the industry that it didn't matter if they were doing it. 99% of the lending was happening completely offline. And so what happened in April was a complete shutdown. Of course, that was followed along with the chaos because of the moratorium. So what it meant was that April and May was essentially lending was completely shut down. So for somebody like us, which works with 100 plus partners ranging from the largest bank to the newest fintech, who were doing about 1100 crores across the categories pre-COVID, we came down to 5% of the pre-volume in both April and May. So that's how lending got exposed. And because I'm in a position where I am, where we are part of the group which has Policy Bazaar, so I was able to see insurance closely. And again, what got exposed was that how insurance was far better prepared for a scenario like this, and continued to really adapt really fast and deliver at least 50, 60, 70% products to 50, 60, 70% of the customers in the period. And over the last 4 months, they become much more and more efficient. Whereas lending kind of shut down. After that, I think after the initial shutdown and chaos in April and May, what's starting to happen, and hopefully that will be the biggest gain from this crisis for the entire lending and credit industry, is that people started taking digitization really seriously. thankfully for the industry, RBI had approved video KYC just before pre-COVID happened, and people started to build solutions. You asked that question to us. So we, as of today, we work with two partners who are doing, both of them banks, by the way, doing credit cards. One bank is doing credit cards and one bank is doing personal loans, end-to-end digital. The proportion is very small, and like Harsh said, that the efficiency is still not at the level of offline. It's about 65-70% of offline, but it's getting there. And I think what's very heartening to note is that the larger banks, when I'm talking to them over the last 1 month or so, especially because they've kind of got their moratorium piece sorted, got their capital raise sorted, and now they're really thinking about transformation. They're all very serious about building end-to-end digital processes from a long-term perspective.
Super. Thanks, Naveen. I think this correlationship between insurance and lending that's really important because I think getting a life insurance, getting a car insurance, getting a health insurance, everything is almost frictionless. I think just in life and health, you might need to visit a medical practitioner to get that sign off. But at a smaller ticket, it is completely frictionless. And I think that's something which we should be looking at. Rajat, I'll come to you. In fact, I had this question, and there's a question even from the audience. How does a lender weather the storm of COVID? So, two things simultaneously. One is, wanting to lend. Second is collecting. Harsh spoke about, 1,300 cities collecting digitally. Can you share some lights what's happening from your side?
So on the collection, so is the question around collections? That's the...
Yes. So it is both that how do, lenders weather the storm? And I'm assuming collection is a very important storm to weather. So it's connected together.
So look, the way our platform is built, the beauty of why we started peer-to-peer lending was primarily because of these kind of situations. Because we built that the money is on the supply side, there's too much of concentration with too few people as far as the money supply is concerned. Even today, the top 10 banks control all the money supply in this country, right, for all practical purpose. Now, we wanted to create an alternative supply of capital, and which we did. And that had to be created in such a way that no lender takes all the brunt of everything. Why do the institutional lenders behave in a herd is primarily because there's too much of concentration. So if one sneezes, everybody catches the cold, right? That's what is happening right now. But we have a base of nearly 100,000 lenders, out of which nearly 30,000 lend on a quarterly basis. Now, when you have such a distributed supply source who have their own different risk levels, it's like a stock exchange. Some people see an opportunity, some people go conservative. So we have a set of lenders who went conservative, and there was a certain set of lenders who started operating in this market the way it happens. So if you build a P2P lending the way we built it as an exchange, this problem gets sorted out because we give different types of borrowers. So like education loan was doing really well on our platform. Okay. It was moving and borrowers were coming in. So there is always opportunities out there. Right now the good borrowers are coming in, 750 plus, and everybody.
And collection has not been a problem, mainly.
Pardon?
Collection has not been a problem.
The collection has been a problem, but there are enough lenders who are ready to take the risk because they know they're getting better quality of borrowers right now because nobody is lending money. So just think of it like an stock exchange where when the markets dipped, there were new sets of investors came in, right? And we saw the record number of demat accounts being opened.
Naveen,
it's something like that which have behaved on a P2P lending platform, which is very different from a typical lending situation, which you would say that credit supply went away, nobody is lending because one bank stopped, so all other 9, right? And because of that, the NBFC stopped and everybody stopped. Okay. Whereas out here, you have a very distributed lending system. Okay, so you, Naveen, vis-a-vis Harsh, vis-a-vis Rajat Gandhi could take a different view of the situation, right? There were some people who wouldn't have lent for anything. Even if they had put their father's profile, they wouldn't have lent money to them. Okay, but there were people who were ready to lend out money. Now, on the collection side, we saw a very interesting thing which I had touched upon earlier, which is about people holding cash. So one approach was, which I saw the whole ecosystem working on, was that chasing the borrower with phone calls and those kind of things, which was a very coercive way of collections, because everybody is talking about doubling up on collections. Now, what does doubling on collection mean? That all the sales guys start calling up the borrowers. So we came out with a different approach and said that can we incentivize and make the whole experience happy. So we said that okay, we gave out gold coins for every person who was giving back the loan back.
Oh, wow.
Okay.
Very
So
innovative, I must say.
we called it the EMI Ka Hero, and we said that okay, if you pay your next 3 months EMI, not look for a moratorium, we'll incentivize you. Idea was to bring down the pain out of it, and frankly speaking, the whole collection industry works on phone calls and the irritation value which lender creates. Okay, I won't say get into coercive thing. Now we didn't want to get into that because Bajaj Finserv or maybe Harsh also will have a better infrastructure than us to make more phone calls than Faircent can make. Okay. So we said that can we create a habitual positive vibe towards the whole thing and say that, okay, here I am paying my EMI and here's a company which is giving me a gold coin. So I think that really helped us because it just reduced the pressure on the collections team. I didn't have to double up on everything. So even a 10% increase, and it gave a very positive vibe with the customer, and we had a major uptake.
Super.
So on June, we were able to reach pre-COVID levels on a 0 to 30. Okay, nearly almost that.
Perfect.
So I think that was
sorry, Rajat. I think the audience has got that. Sorry to cut in, because I think Naveen, you wanted to say something on this.
I just had a couple of very small anecdotes and I think view on collections. When the lockdown started, I know one of the top three, I won't name, of course, banks could not, their own employees could not get access to their own data because they had never prepared for a scenario to work from home. And so we have a small collections business also where I collect for the partners from my credit score portfolio. And there was a 20-day period where we did not have data because the bank, which is the owner of the loan, could not get access. So that's how unprepared banks were. Another anecdote is that another of our NBFC partners, again I won't name, told me in private that when they have tried to reach out during the moratorium to really understand how customers are feeling, behaving, etc., they could contact only 65% of the customers. So they're really worried. But at the same time, my view is that the storm is so close with the moratorium ending in September, actually in August, that I think the transformation in acquisition will happen first. Right now, everybody's focus is to collect with the same pieces that have worked really well, which is offline, tele-based collection. And that's hopefully what will take the industry forward and help them kind of do well from September to December. And post December, the transformation of collection, digitization of collection will really start.
Perfect. So, in fact, Naveen, you touched upon it, and as a bureau, in fact, we have a lot of our partners, all big banks, NBFCs, MFIs. In fact, they have taken a lot of portfolio data, and they have done benchmarking, and in fact, even contacting. So, yeah, now it's in fact, you see that a lot of collection benchmarking is happening, and they are reaching out to customers. Which is right, but also they are using it for upsell and cross sell to the existing base, right? I'll get you in, Sonal. In fact, this is again one question that I had, and again the audience is asking the same thing. Basically, how do you see the future and near future of digital lending? You are a marketplace. You spoke about in the green room, if you may, on pay later products happening. You also have lending aggregators with you, and then you have a direct lender with you. So, can you share some light around that?
Sure. So, Naveen, the way we see a growth in online transactions on Flipkart, or rather in India itself, right, growing, that growth is definitely going to come from tier 2 and tier 3, right? So as customers from tier 2 and tier 3 come online in this new COVID world, right, enabling access to credit actually is going to help them buy aspirational products, right, of their choices. And it's a must, right? Also, as your tier 1 customers and metro customers try to cope to maintain their lifestyle, right, there is going to be surge in demand for microcredit. And this microcredit could be pay later, it could be a short-term EMI for 3 months, 4 months, 5 months. But these microcredits are going to gain propulsion, right, in this coming short frame of time as somebody faces a cash crunch, right, and is looking to relieve that. The signals of this is already there. We could see it on the platform, and EMI is like a popular choice for our consumers who are looking to buy large appliances or mobiles, right? And as economy opens up more and more, we are expecting at least a 2x growth in access to these credit financial constructs on the platform itself, right? Similarly, right, as consumers are looking to pivot to very quick loans, right? Let me buy today and let me worry about payment slightly bit later, right, when I get my salary, or maybe next week I'll have some more money. The way consumers are pivoting is that the adoption of our own financial products, right? We expect to see a 50% growth in that again in a very short term, right? And as India, right, where essentially our middle class is growing, and this is the middle class which is essentially supposed to contribute 40 to 45% to your consumer spending in the country. The demand for loans is only going to increase from there. The only change is going to be, as you were focusing earlier in the conversation, the customers are going to look for customized products. So maybe the typical loan products is not going to interest them, right? They're going to look for a stack is going to be important. Collections has to change in some bit and shape, and we are also taking steps in the right direction because we are working with our partners to enable repayments on the platform, right? So that the impact of telecalling can be reduced. Can you nudge a customer from a Flipkart platform itself? So yeah, all of that is happening. So so hopefully the future is bright, right? And we'll continue to work in that direction.
Super. Thanks. I have a question. Actually, again, this has come from the audience, and again, I think it's very, very relevant. And this might be to two of you, Harsh as well as Naveen, right? They are talking about how do we actually serve the underserved. And underserved could be a consumer and could be an MSME or SME. I won't touch upon the microfinance bit because none of you all play in that space, and maybe I can add value on that. But just to bring in Harsh on the SME, MSME space, how are you looking to solve for that underserved market? Are you looking at alternate data? How are you looking to underwrite a new to credit, small business owner?
Right. I think, Naveen, it's a puzzle, or it's a question that all of us have been trying to solve, right? How do you reach out to the underserved? I think maybe 5-7 years ago, there was a lot of data or maybe information asymmetry, right? So I think maybe 7 or 10 years ago, you didn't have access to alternate data. You just had limited access to financial statements or tax returns for these guys, right? And maybe the education levels or those kind of businesses and all those things, e-commerce sellers or mobility or delivery guys and all those new age businesses were not there, right? So in today's age and world, Naveen, actually we have a lot of alternate data available, right? And I think when we actually started out in 2014 as well, and the idea always was to do a cash flow based lending, which all of us talk about, right? But if you prudently ask me, was it possible then compared to what we are able to do now? Yes, it's far more easier now, right? And I think in developed economies, a lot of people have developed cash flow based lending models, right? Where you actually go ahead, evaluate the cash flows of that guy, what comes in, what goes out. And based on those metrics, you actually identify the working capital requirement of that guy or that small business owner and then lend him out as well, right? And in today's day and age, earlier these loans were difficult to do because the overheads involved in delivering a small loan, maybe a 2 lakh loan, 3 lakh loan, 4 lakh loan, were pretty high, right? Because you had manpower getting involved, the manpower was costly. Then there was geographical issues, right? You had to open up branches, people had to have touch and feel of the customer as well. But now that the digital means are there, in terms of origination as well. Digital means are there in terms of credit based algorithm or cash flow based lending you can design and do. And similarly for collections as well, you can model your collections entirely on NSCH, right? Like we don't have any cash collections or anything at all in any part of the country, right? It's all totally, every of our customer has to give us an NSCH, and that NSCH is banked and we collect EMIs from our customer. So that's one thing. Another point, I think, Naveen, that I want to raise over here is that we've not focused on origination as well, right? I think lending has always been a part and parcel where it's told that you need to do credit and collections, right? I think that's true, but I think that's kind of an hygiene now where you need to have a proper credit models and collection systems, right? But if you originate and focus on right kind of people, right, who actually you can serve, is also becoming the new thing, right? Like when I'll give you a typical example of us, right? We do MSMEs, but our typical borrower, the average age is 33, 34. 80% of my borrowers are educated, right? In the sense that they are BA, BCom, BSc. Just we should think of all of our hometowns, right? Where there are people who are running coaching classes, computer academy, a mithai store, a kirana store, and all those things. They are educated. These are the people who, even if they're running small businesses, they bank their receipts, right? And make payments through them, or make salaries payments to them, make tax payments to them and everything, right? So they have banking data and history. But they might not have the right form of financial statements. They might not have the right form of income tax returns as well, right? So across our journey, Naveen, we've also targeted or focused a lot on origination as well, right? On what kind of people we can serve through our platform. That's also one of the very critical differentiators going forward on serving the underserved market as well. Of what characteristics you can pick, what characteristics you can assess, and give money to that guy. Obviously, underwriting and collections will be the hygiene factors, but origination will also play a very critical role. And like again in the green room we were discussing, right, that all the maybe bureaus as well will find out their own core strengths in terms of delivering money, in terms of delivering data, in terms of delivering utility or everything to the lenders. Similarly, the lenders will also find out their own mojo, right? And that's how it works. Right? In a large growing economy and such a large economy like India, you need not have everyone doing everything, which currently has been for last 10 years. It's been the trend that a guy who's doing home loan is also doing LAP, is also doing gold loan, is also doing every other loan that's possible in the country, right?
Correct. So Harsh, you're right. I think, like you said, cash flow is one. There are so many other alternate data. There's psychometric data, there's metadata.
Yes.
There's so much data that is coming. And like you said, very rightly, bureaus are giving the bureau data as well as this additional data which can merge together and get underwritten. Hey, Naveen, on the same thread for underserved, that was on SME, which we heard from Harsh. There are people who want, to tide over the end of the month. So, there are these short-term, very, very short-term loans that are there. And you have, I think, more than 30, 40 partners over there, right? So can you share some light around that?
Yeah, Naveen, sure. I just want to spend a minute on why underserved has remained underserved in India from a context perspective. What happened was that India is a unique country where if you're not salaried and you're self-employed, you're invariably underreporting the income. So from a lender perspective, it's always been very, very difficult to predict an income if the person is not salaried with a certain class of employer. That's been problem number one. Problem number two has been that there have been few, the debt capital market has been very, very underdeveloped, which means only very large banks who have had access to liabilities and saving deposits of the consumers have had large capitals to go out and lend in the market and develop the lending. And some of them, if you recall, tried going into subprime or underserved consumer segment in pre-bureau days, that is pre-2007, and almost all of them burned their hands badly and then came out of the subprime and unfortunately, none of them has, I think, felt the need to go back to try and address this underserved market, because India is a large country. The prime market itself is very large. All the banks are doing a great job in serving the prime or salaried customer class, and hence haven't felt somehow the need. And on the other hand, there are the NBFCs or the fintechs who try to do experiments there, struggle with lack of capital access. And we've seen that a couple of times now. Demonetization now, where so many lenders who don't have capital to lend to. And finally, of course, the risk-based pricing has never got developed in the country. So some of these fundamental things, whether it's risk-based pricing models getting developed, whether the debt capital market kind of becoming more developed, and people getting, somebody was mentioning in the conference that there is $20 trillion because of all of this printing money that's happening around the world, $20 trillion worth of money earning negative interest rate, and they would be looking very keenly at a market like India. But
Right.
it's very difficult to do external commercial borrowing. I think I was reading Bajaj Finance's report, and I saw only 5% of their borrowing is ECB, and the rest is from the banks or the deposits or the mutual funds. So those are some of the things. To your specific question on the small ticket lenders, there's a flurry of lenders who came in, and the fintechs in the last 2 years, who started experimenting and tried to find their niches in exactly the category that you talked about. Do small ticket 10 to 30,000, 10 to 50,000 loans for small duration, and strengthen their credit model. We were working with 20 plus of such players pre-COVID. As of today, only 5 or 6 of them are actively lending. The others haven't shut down, but I think they don't have capital to lend, and they also want to conserve a certain amount of capital to survive. So it's a fairly tough environment for that kind of segment right
Correct.
now.
So Naveen, we have 4 minutes left, and I think said an important thing. We need to be resilient. We need to weather this storm. And just 1 minute to each of the panelists. Maybe we'll start with ladies first. Sonal, um, how to be resilient? How to weather the storm? I can't hear Sonal, so I'll go Harsh. What do you say?
Yeah. Hi, thanks, Naveen. I think in these times, Naveen, we just need to breathe, right? I think I've been telling my team as well. I don't think right now we need to judge ourselves, our businesses, or the ecosystem. I think right now is the time to show empathy to our customers, talk to them, help them out, right, as much as possible in their businesses. And as time passes, all of us, the pictures will get clearer. So right now, in terms of business, the focus should be on maintaining liquidity, maintaining capital, maintaining and collection numbers. And on the other hand, it might be prudent if all of us take care of our customers, help them through this tough time. It might be better. I think people are passing judgments. People are thinking this and that. I don't think this is the time. It's not the time to judge whether the company or the ecosystem and everything. I think let more data flow, and that should be done.
Okay.
I mean, I couldn't.
Sonal, you're back. Okay.
Say about that. So you're right. I sort of agree with Harsh very closely, right, on what he just said. I think it's the right time to think about consumers. It's the right time to sort of, figure out what is really going to be the core need for consumers and how do you solve it. It is also going to give an opportunity to players like Flipkart, right, to sort of play an aggregator route here and actually work with the partners to understand how do we solve some critical problems for them, right? Maybe in onboarding, maybe it's digital journeys, maybe in customer segmentation, maybe in collections. And how do you do this in the most customer-friendly way? Because obviously consumers right now, right? And that empathy that Harsh was talking about is going to be the key element here, right? So that's how we are looking at it.
Perfect. Thanks, Sonal. Rajat?
Okay, so in my opinion, this is the best time to innovate. So keep your team and everybody busy into coming out with new products. We may not be winners. And the second part, which we believe, is that this is a big opportunity if you can innovate certain stuff, and whether it's onboarding, collection, or whatever it is. Take that to the regulator, and this is the best time the regulator will listen also to you.
Perfect.
So push that envelope out there.
Super. Thanks, Rajat. Over to you, Latika. I know we have come to the end. Thank you, everyone. Over to you, Latika.
Thank you so much. I think it was some great last words. Be empathetic, be innovative. I couldn't agree more with all of you, and I'm sure there were so many questions pouring in. I think Naveen has a lot of questions which went unanswered on his chat box. Sorry, delegates. It would be great if you can post those questions on our social media handles. I would request the panelists if they can spare some time and answer that. Thanks again to our sponsors, SteadyWatch, Ibotech, UK government, SBI Mutual Fund, Bank of India, Onco, ID Sign, PayPoint, and all of you all who have supported us for the last 48 hours. And of course, thanks to the wonderful panelists. For now, good night and stay safe. Thank you.